Hi, everyone. Thanks for joining us today. I'm Nathan Stowski, Wealth Manager at Pacific Excel. Hope everyone had a wonderful holiday. Today, we're going to talk about the fourth quarter market recap in 2024, as well as what we see moving forward in 2025. Information is brought to you by your investment management team and research team at AssetMark. Let's jump in. We're going to start with the market recap of 2024. So the economy was very strong. This was driven by a lot of the stock in AI with artificial intelligence. So we had back-to-back years, 2024, 2023, with over 20 plus returns in the S&P 500, something we haven't seen since the 1990s. This was driven by about 7 stocks. That's your Alphabet or Google, Apple, Amazon, Meta or Facebook, Microsoft, Nvidia, and Tesla. These stocks accounted for 55% alone of the S&P 500 growth in 2024. So you can see that right down below here on the bottom screen of the PowerPoint. What struggled was international and developed markets. You can see that on the middle screen right here, developed and emerging markets. They had a tough fourth quarter. So this was brought on with tariff concerns, as well as the US dollar had risen, just with the signs of the new policy from the administration. Another noteworthy investment was gold. It actually rose higher than the S&P 500 last year. Why? Well, the demand for gold was fueled by central banks from countries like China, as well as India and Turkey, all looking to diversify away from the US dollar. Also for investors who are worried about the size of the US debt and what that means for the long run. But overall, 2024 was a great year for equities in the US. Okay, let's take a look in 2025, kind of do a snapshot where we're at. It's hard to believe 2025 is here, but it is. So on one hand, we believe we're going to continue to see more of the same economy. Okay, we're going to see above trend growth followed by elevated inflation. On the other hand, policies from the incoming Trump administration have the potential to move the needle on both growth and inflation. At the end of the day, we should see both tailwinds and tail risks in 2025. So on this screen here, we continue to see both growth and inflation slowing, but these movements have gotten even slower. So in 2025, we could be stuck right in the middle of the box. As you can see, the arrow pointing in right there. It's not a bad place to be. So equities have been strong. Long-term bonds have not been so good. Consensus growth estimates for 2025 call for 2.1%. We can see this on the left-hand side here at the median, with a low of 0.5 and a high of 2.9% growth. I know it seems really broad, but that's not unusual. So there's always a bit of subset of economists that can see a recession right around the corner. So we think that a recession is highly unlikely this year. Consensus information estimates call for 2.5 CPI, as you can see on the right-hand side, the median, in 2025, with a low of 1.9 and a high of 3.8. So if you look at the range of growth and inflation estimates, you could expect a pretty wide range of interest rate expectations. For example, if we see 0.5% growth, we could see 100 or 200 basis points rate cuts from the Feds. If we get higher inflation, like 3.8, we would expect no rates cuts this year and maybe even a rate hike. So that's what this picture looks like. Growth, let's dig into growth a little bit. One reason the economy has been so resilient is household net worth. You can see here on the left-hand side. 2007, we had a big drop off with the mortgage crisis, but since then we've been on a trajectory up. And you can see this in the service sector of the economy. So when we look at real indicators like restaurant bookings, a lot of us are going out to eat, booking restaurants, eating at our favorite places, as well as TSA checkpoints. People are traveling, people are going to different countries, spending money. So this is continuing, and it's a healthy economy. Along with a strong job market is also very supportive. Okay, we also added 190,000 jobs last quarter in 2024. So it's just above the long-term average. Let's move into inflation. So we still show major inflation categories. Headline inflation is about 2.7 as we look all the way to the left here with all items year over year, and 3.3% year over year on the core. We're a lot better shape than we were a few years ago. We probably still remember 8-9%. So we also show the inflation for shelter, goods, and services. You can see the shelter and services continue to be really high. We talked about the strength of the service sector a few minutes ago. Shelter inflation, we think, will also continue to remain elevated. I want to finish up the economic summary and market outlook with current macroeconomic dials. So as we categorize growth, you can see here on the left-hand side, it's good, but close to neutral. So it's right on the bar between green and gray. We characterize inflation, the second column here, as neutral, but close to good, because we can still see a slowdown in inflation. And financial conditions, all the way to the right-hand side here, this encompasses a number of different interest rates and market risk measures. So we're characterized as neutral, but also as good because we're in a cutting cycle, at least for now. So to sum it up, so key views for 2025, we're going to continue to see some continued growth, as well as elevated inflation. And very important to remain diversified and stay invested. Thank you all for watching. Hope everyone has a prosperous 2025.